ever wondered how traders turn $100 into $10,000 positions in the Forex market? Well, that's the power and also the danger of leverage. And so that is what the video will be about. Forex leverage for beginners and how to calculate risks and maximize rewards. And by the end of the video, you know exactly how leverage works, how to calculate your risk, and how to use it safely as a beginner. And I will also share one golden rule that pro traders swear by to avoid blowing up their accounts. So what to cover in this video? Well, what is Forex leverage? Calculating risk and rewards, the risk of using leverage, and last but not least, safely using leverage. So leverage is essentially borrowed capital that allows you to control larger positions with a small deposit. And it is also known as margin. If you have a, let's say, MT4 or a MT5 trading account on your phone, you often see the balance, the equity, and also the margin. So yeah, the higher the leverage, the higher the margin as well. And think of leverage like a magnifying glass. So it can help you see details, profits clearly, but it can also burn your losses if misused. So it's really important to use the right leverage. And just a few examples of leverage ratios. We have the common ones. Those are 1 to 10, 1 to 50, 1 to 100. And you also have more for the unregulated brokers, 1 to 1,000, 1 to 2,000 leverage, and that's really, really high. And with a 1 to 100 leverage, a $100 margin controls a $10,000 position. So how to calculate your risk and rewards? So to calculate position size, you have to multiply your margin by the leverage. For example, let's say you have a $500 account, right? And you use the leverage 1 to 50. Then you control $25,000. Why? Because we do 500 times 50, and that equals $25,000. And it's also important to understand the pip value. So in a $25,000 position on, let's say, Euro USD pair, each pip equals $2.50. And a 10 pip move means that you made $25 gain or loss, depending on your entry, of course. If you did a buy and it goes to the upside, it's a gain. Or if you did a buy and it goes to the downside, it's a loss. So that's important to understand. And what's also really important to understand is the risk to reward ratio. I believe that you heard it quite often if you watch multiple YouTube videos regarding trading. But try to aim for a positive risk reward ratio trade. Many traders, they swear by a 1 to 2 risk reward ratio trade or higher. That means that you risk, let's say, $50 to potentially gain $100. Personally, I don't have a default risk reward ratio trading setup. I just look for what the market can offer. I look for specific support and resistance levels, other important levels, and then I could end up doing a 1 to 1 risk reward ratio trade, or a 1 to 1.5 risk reward ratio trade, or sometimes it's a 1 to 3 risk reward ratio trade. So there's not really a standard risk reward ratio trade that you have to take, but if you use a 1 to 2 risk reward ratio trade, it means that if you win, let's say, 50% of the time, you are still profitable, but more on that later. I can show you my FX book and trading view for the calculation. So here we have my FX book. You can just use this tool for free. Just Google Euro USD leverage calculator, something like that. We go to trading view. Okay, over here we are looking at a Euro USD chart on TradingView. It's a free charting platform. You can sign up for free. Just check out one of the links down below in the description. I believe it's under my resource page, or it's in my resource page, and you will get a small bonus, something like that. But okay, this is TradingView, and okay, so I am going to show you the risk reward ratios. So over here, let's say that you take a buy trade, right? You see this candle over here, you believe, all right, this is a nice opportunity. I put my stop loss below the latest low, the swing low, which is here, a few pips, and I aim for a 1-to-1 risk reward ratio trade. So that means that I am out at this point over here. Zoom in a little bit. So this way you can easily show your risk reward ratio by using the tools of TradingView. You just go to the left side, and then here you have long position, short position, and in this case I picked the long position. And let's say you enter here, we're looking at the daily time frame right now. So after one day we see, and on a Tuesday here we see that on Wednesday a big candle closed, right? Profitable, I mean bullish candle. Then we take the buy order and we get out of the trade over here when it has reached a 1-to-1 risk reward ratio. So that's nice, of course, and that means that, let's say, if you win over 50%, then you are profitable. But let's say that we aim for a 1-to-2 risk reward ratio trade over here. It means that we enter the buy here, goes to the upside, we're in profit. It makes a little pullback. We're still here, a little bit of drawdown, but that's a few pips. And then from this moment, it goes to the upside and we get out of the trade here. And then we made 2 times our risk, right? So yeah, you can use TradingView to play around with the risk reward ratio trading. So just one example, let's say sell trade, nice opportunity. Here we see a big sell candle, a bearish engulfing candle. We place our stop loss above the latest high, the swing high, and then we aim for again 2.5, let's say 2.5. And then here you went out of the trade at this candle, right? So again, you can use TradingView. Also MetaTrader 4 or 5, but I prefer TradingView. It's much easier. Okay, so leverage magnifies both gains and losses. So while leverage can multiply your profits, it also magnifies your losses, and this is why 70% or even more of 70%, 80-90% of retail traders lose money because they just use too high lot sizes. And this way they are just too greedy. They want to make quick profits and a lot of money in a real short time, and that means that they over leverage and they use too high lot sizes, and then with a small move they blow up their account. And if your account balance falls below the broker's margin required, you will receive a margin call, potentially wiping out your position. So I believe every trader that starts, they have received a margin call, and it's really alarming because suddenly you get emails and your screen pops up red, and it's crazy to experience, but everybody has to face that at least once in his trading career. And here's my tip: just never risk more than 1 or 2% of your account on a single trade to protect yourself. So don't try to make, let's say, 50% by just using one trade, because if the trade goes bad, then you lose 50% or even more if you do not have the right stop loss placement. So and of course everyone loses. Some people lose more, some people have a 70% win rate or 80%. That means that you lose 20 to 30% of the time, right? So you still lose. So that's why that I say just never risk more than 1 to 2% of your account on a single trade to protect yourself. So if you want to do this for a long time, then yeah, just use the 1 to 2% rule. Of course, if you have some money that you want to gamble or just want to take a little bit of more risk, you can use 5 or 10% of your account, but that's just money that you're willing to lose, you just to risk, right? So it's nothing serious. Okay, so here are my tips for beginners. Just start small with lower leverage, for example 1 to 10, 1 to 20, and even regulated brokers, they do not offer more than, I believe it was over 1 to 500. So most of them, they use just 1 to 100, 1 to 200, something like that. And also it differs from trading indices, then it's always lower, the leverage. And just use stop loss orders to manage risk, really important. Everyone loses once in a while. Then if you lose, then you wouldn't blow up your entire account because you use the stop loss and the order gets closed if you are wrong. So it's a good thing, right? Because you don't want to let it drop even lower, and then you risk even more than the 1 to 2% that you were aiming for. And the last thing, just practice on a demo account to build confidence. It's not a shame to just first start on a demo account, just play around with the platform, play around with trading in general. How does it work? What kind of indicators can I use? Do I want to use indicators? Just play around with it. How does a one lot size make a difference? Just play around and see how things go. And again, a golden rule of mine is always calculate your position size and stop loss before entering a trade. Just think long term and stay disciplined. So don't use really high lot sizes, always use a stop loss, and that way you are here just for the long term. If you want to do this for 5, 10, 20 years, if you want to be a consistent profitable trader, then you just stick to this golden rule. And here is a recap in just one sentence. Leverage is a powerful tool, but only if you understand and respect its risks. Keep your trades calculated and your risk managed. If you like this video, give it a thumbs up, subscribe, just check out a few links down below in the description if you need any help, and I see you in the next video.